Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading, and want to do a little post-market recap video. Yesterday when I did the weekly prep video, I talked about how the market was at a support level. It's a very important support level at that 2040 area. If it would have broke that level, you're probably looking to come down to 1980 ultimately, and obviously it held support. Now this is getting into the when bad news is good news type of scenario. And for those of you who have been around the marketplace for as long as we have, you've learned to see it all, okay? And we've learned to see when negative news is really positive. And now, prior to 2008, 2009, negative news would always be priced into the market, but that's not the case now with a monetary policy driven market, with a quantitative easing driven market. And before we even got any economic reports coming out today, we started seeing that the market really started popping last night before it even opened up today. So, for example, if you go back to a 15-minute chart coming in here on Sunday, this is the marketplace coming in right here. It opens up Sunday, and then you start seeing that trend develop before it even opens up Monday morning. And so when we're looking at that trend kind of developing the futures market, looking at the ES contract, this trend was already driving before the market even opened up today. Now, what kind of drove that market today was basically you had the Chinese come out late last night and say that the Chinese government, Chinese banking system, they have not done enough to support the recovery in China. They're starting to slow quite dramatically over there in China, and so they came out and basically stated that that's code for everything else we now know out there in the market. The code is this: do whatever it takes, do whatever it takes. Massively manipulated the entire situation, and so when they say stuff like do whatever it takes, what that means is we're going to start doing more quantitative easing. So look for the Chinese to come out and do quantitative easing along with the Japanese and the Europeans. And so whenever we have a major economy in the world announce these types of policies, it is absolutely cheered and raved and hoopered and hollered about in the financial markets. And that's kind of what you saw in this movement before the market even opened up. And then the market opens up right here, and you see the market drive up at the first 15, 20, 30 minutes, and then it kind of just fades throughout the rest of the day because there's nothing else out there to kind of drive in. So this trend really started late last night with the Chinese. Now, coming into where the good news is, where the bad news is good news, we had two economic situations happen today. One, you had personal spending, and personal spending was actually supposed to come in a 0.3% increase. It actually missed again, and that's something we have seen quite routinely over the course of the last few weeks, miss after miss after miss from an economic projection. And so personal spending came in at 0.1, and that came in right here at 6:30, right there, my time right there. And as you can see, the market really didn't care about that. And then you had the Atlanta Fed come out and give their latest forecast on GDP growth for the first quarter of this 2015. And estimates are it's going to come in about 0.03 for the first quarter. Really, really nasty projection. But most people, in fact, if you include the personal spending and the strength of the dollar and everything else we're seeing out there, it actually looks like it might come in under zero. And I'm really looking forward to this next month when we do get our first quarter GDP, the advanced number in April, because if it comes in at a zero, that's gonna spook the markets to a certain extent. And I'm not saying it's going to come in at less than zero. I actually expect maybe a slight increase in GDP, but it is going to be very, very concerning from a quarterly perspective for GDP over a year. So first quarter looks like it's going to track right around zero. And guys, that's coming from from the Fed. That's coming from the Atlanta Fed that stayed at the 0.03 range, or excuse me, 0.3. Now, kind of also look on yesterday in our video, we also talked about how we were strong dollar coming into the market today, and as you can see, that $97 level held really well, popped off that 97 level, and as you can see here, starts to move back up. Nice little wide body candle. Look for the dollar to continue to go up. We went long dollar at 97. It's up a point 0.3 right now, 1.3 right now. good day for the US dollar, not so much for crude oil. I can't say it was that negative of a day. It was more like a doji, but it did test to the lows here. I expect a little bit of, as the dollar goes up in the next, this week, I expect crude to come back down. Gold kind of got beat up pretty hard today. And as many of you who listened to that video from yesterday, I said that yesterday. I said, you know what? I think gold's going to come back down into the 1140 range. And that's exactly what is happening right there. Silver following gold. Look for silver to come test that 1550, that 16 level. Euro dollar, same thing. Euro dollar kind of coming back down in price. Look for the dollar to come back down, excuse me, the euro to come back, test those lows. And then the VIX was such a good day today in the market. The VIX is always going to come down, and you saw it come down. So to recap, dollar up, commodities down, market up, but a lot of that movement was conducted in the first 15 minutes of the equities market open here at 9:30 a.m. Eastern, and it really started developing last yesterday. So when we're looking at the kind of the market the rest of the week, anybody's guess is as good as mine. Maybe not. That's not a true statement. But I will say this, based on the technical analysis, these trends usually have a tendency to continue. And tomorrow we do get some more economic reports that could impact. You have, remember, Lockhart giving speeches. You got also the Chicago PMI report coming out. That's a manufacturing report. And you also have consumer confidence coming out tomorrow. So that could obviously impact it. What I'm looking for in tomorrow's economic reports is if the marketplace will continue to do the bad news is good news, because if it's bad, if it's really bad, if the economy is really, really bad, that's a good thing for Wall Street, because that means the Fed will not raise rates as soon. They are wrong in both capacities. This will end very, very nasty, and we're going to look back on this, and we're going to appreciate the old markets, the ones where they just manipulated subprime or tech or whatnot, and didn't massively manipulate everything. Matt Justice for Tackle Trade. Check us over there at www.tackletrading.com.